Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube? Thank you, Marty. And how are we doing in YouTube this morning? Welcome to the Trader Lab. Appreciate you guys being here. Hey, thank you. Well, welcome everybody to the Trader Lab. I'm your host, Tom B. Appreciate you visiting. The stream's about integrating Bookmap OrderFlow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone at no cost. And the Trader Lab's a community of like-minded traders who've come together to leverage their collective experience. This is about the business of trading. It's based on structured trades. And all of this is available at no cost in Trader Lab. And if you're visiting in YouTube, there's a link down there and all you have to do is verify your Discord email, so we make sure you're not spam. And then it's a community of like-minded traders who've come together to leverage their collective experience. And it doesn't matter how long you've been trading. Our senior trader has over 50 years. I have 46, both professionally and otherwise, out here with you. So that is available. Also, I have some exciting news, and that is we have a contest going on at Bookmap, and you guys don't want to miss out. Let me show you what that is, and then we'll get into the business of trading. One moment. Let me try to do this effectively. We're running on, I've got like 4 computers running here, so it's like kind of a pandemonium in some ways. Let me take care of business. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. We get there, we talk, right? So let's see if I can get this going. Well, maybe not. Okay, just a moment here. I got a lot to show you today, but I want to show you this. Trading Desk Photo Competition. It started June 2nd and it ends on June 30th. Have you not submitted your photo? This is open to everybody. You have to take a photo of your trading station or a shot of you trading. Bookmap must be clearly visible on one of your screens. Post your photo on Instagram, X, or LinkedIn. Just use the hashtag BookmapDesk. No signups, no data, no uploads. Just post your photo. Now, no cheating. Has to be taken currently. It's got to be real trading station, not AI generated or somebody's that you borrowed. I don't know how you borrowed that. And include Bookmap running on your screen. By the way, now guys, this is a whisper. You know what a whisper is, right? If you don't have Bookmap, you can go down below in YouTube. There's a link to bookmap.com. There is a free digital version of Bookmap. You can grab a screenshot of that. Nobody has said to me, don't bring it up. So, hey, think about it. But why would you want to do that? First prize, $1,000. That's US. 1 year of Bookmap Global Plus and data. Second prize, $500. And third prize, any year of Bookmap Global Plus. Third prize, 3 months of Bookmap Global Plus and data. Now, here's some photos, just to give you something to think about. And I'll tell you, these things are pretty impressive. I want to know who that trader is right there. But let's look. Let's not. I have to scroll the right thing here. Let me try this. So here's some trading setups. That's kind of cool. What do you think of that? You could send yours in. I mean, come on, $1,000. What are you waiting for? Anybody offering you that? Don't have to buy anything. You just got, oh, that's kind of nice. Who's that? Now, there's somebody. There's a mugshot. Who is that? Thanks. And look at this. Telling you. And who's that guy? Look at that on the monitor there. Huh. Got some nice setups here. So anyway, you guys have till the end of the month, June 30th, to win $1,000. I just don't want you guys to miss out on that. You know, sometimes you just gotta do what you gotta do. Now, let's talk about yesterday. Guys, this is the business of trading, and the business of trading is really trade plans. Now, in the Trader Lab, I have shared a substantial amount of the methodology I developed for myself over 46 years of trading. Now, it's not the Holy Grail. It's not going to solve the issues we deal with in trading. What it can do is give you a process template that you can reverse engineer so you can anticipate behavior. There is nothing to predict in trading. There's only maybe. Well, maybe, and if maybe has a statistical edge, maybe you can differentiate your behavior and your outcome from most retail traders. Now, let's take a look. This is the gap and up day we had day before yesterday. I want to show you structure. This is about market mechanics. Now, this was a previous retail price. And let's just take my word on some of this. That's like saying, oh, fair price. This was a previous retail price, fair price, and we were below it. When we come above what is considered a fair price, it can become too low. When we go up to the next one, and now we have this line is called volume point of control. It's the retail price, and retail is shopping, right? The highest volume is the fair price. So it was fair there, and now it's fair here. What have I found? A fair price. Oh, that's exciting, Tom. What do I do with that? Well, here's what you can do with it. If I open at the top, and this is yesterday's RTH open, I can do the following. I can open, test, and accelerate, or, and this is where it gets strange, and if you guys watched yesterday's stream, and you should be threading together day before yesterday's RTH, this is in Trader Lab, and then yesterday. What is the possibility? Up or what? And by the way, I believe the ETH volume point of control was here. I don't remember. You guys can correct me on this. I just don't remember. And if so, we can return to it. Why? Fair price. What's this? Fair price. So in the Trader Lab, and let's remember, we have an uptrend. How do you trade this? Great question. Well, you have choices. You can just take longs from somewhere, part of the thrill, or if you're an advanced trader, you can take a short to come back and check the retail price. Here's another piece, and I spent a lot of time this morning in Trader Lab. You guys can visit Trader Lab. You're going to see I've posted basically how to create a plan and how to be participating potentially successfully if you have a vetted trade plan in the current market. And you might wonder how you do that. And we'll talk about. So what is this? What's the language? So if I come up here, what do we know about this? What do we know? Well, we know this is a single. That means urgency, maybe too low. We know this is the retail price, so we can do this kind of a thing. And we know the market is long. There are sell stops being trailed by weak retail traders like us. And we know we can get breakout traders who come in because, oh my goodness, I'm missing the move. What happens though if we go up these buyers and then we attract our sellers? The longs in this and the longs in this, the weak ones, us, can get taken out. Does that make sense? Now let's move along. There's more, by the way. Really? Yes. Now, this is yesterday. What did we do? Back here. Now, to confuse you, which is not my objective, but this may confuse you, we're talking counter trend trades and we're talking aligned trades. If the trend is up, how does the market work? What's too high? What's too low? What is retail? There's a couple elements here. Higher time frame trend up, which sets up these targets for today. Not a recommendation, and 92, by the way. We'll talk about that. If I sell this, which I can, in the stream yesterday, it was about picking stops, grabbing liquidity, and trading two-sided rotational trade. Here's your choices. Sell, counter trend, no problem. If you're in Trader Lab, it's more advanced because you're standing in front of the train. But if you understand market mechanics, you know those buyers can get thrown under the bus, and then the buyers sitting long from the day before yesterday can get filleted. Now what do I know? If this is the retail price, high volume, where is the price too low? There. If I think the trend is up and I only want to take longs, this is called mean reversion. Outside, back to the mean. If I'm trading counter trend, I'm trading back to the mean and then the flush out the weak longs to there. So I could be taking shorts to there. I can be taking longs to there and whatever. Okay, so this is yesterday's trades. And remember, targets. Let's go a little deeper. Now, apology for the noise. I'm just showing you another way to look at this. This is a Renko chart. Now, this is the up day. Watch. This is the retail price on the up day, RTH. This is that low volume notch I showed you. In this ETH, this is yesterday's ETH before yesterday's RTH. So let's look at this. This is a low volume node. In other words, I'm not paying that. Oh, but it's on sale. Where's my stops? Here. In the ETH, where do I come? I pick the stops. I check this low volume node. I find my buyers in the ETH, and I take out this high, and this is my ETH high. Now where's my stops? Under there and there. So what do? Good question. Yesterday's RTH. Open up. Get those breakout buyers. What happens to them? Sorry, Charlie. You heard of Charlie the tuna? Selling. Where to? Where's the stops? Under here. Where's the next support level? There. That's a long. There's another piece here. This is called value area. 70% of the volume on this day took place in here. This is considered a fair price. Out here, not so much. And then we have these low volume areas, which are basically swings. This is probably driving you crazy. I apologize, but this is the auction. Too low. Now, where's my retail price? It's here. So yesterday in Trader Lab, we had shorts, longs, and this is called the IB failure. I narrated this in the stream, I believe. Of course, I can't remember, but this is your ballpark. Now, what do we get here? This is the ETH. What do we do? Yesterday's low is here. Not so much. Why? Too low. Then what? ETH low. That's nice. Now what? Higher. Where's my retail price in the ETH? 61.67. Now what do? By the way, this is the higher time frame. This is now what the RTH candles look like. I've taken these 2 days. Now, I know I'm running through a lot of stuff here, so apologies. What this tells me is that 32.31 in this 2 days of combined volume is too low. The retail price is 46, highest volume, so it's like this. Gap, and where are we trying to go? North, somewhere. Again, now, let's come to today. So this is the up day. This is yesterday's long mean reversion. This is our, wherever it is, open, right there. We test, fill the gap. This is a short, or you're just waiting for the long. North. Now we have another long that's set off here and the target was here. The next target's 92. I hope it was worth the trouble, and if it makes no sense to you, apologies. Now, RTH open. Now, I'm going to show you a couple trades. These are structured trades. Now, strong warning. This is not plug and play. This is an advanced methodology. What's advanced about it is you've got to learn to understand how the market works. Why does it do what it does? How can you get in alignment with it? Now, let me try to take you before the RTH open. I'm going to show you something, and this will potentially give you brain damage. This is the ETH. This is a distribution of volume. Out here is what we call a low volume node, and it's more or less right there. What do you remember from what I just showed you? The outside edges are low volume. And why? Oh, it's on sale. And where's the ETH volume point of control, retail price? It's up here someplace. I think over here, don't remember. So retail. Oh, it's on sale. Retail, and then the ETH high. Target, over 90% probability, and much more. So let's look at the first trades. If you have questions, please post them. Let me switch computers here. Hope you guys are getting something out of this. Please leave a like if you're touring in YouTube. I see we have another long just set up, actually. Got to get to that eventually. A lot of trades in here today for traders that have trade plans for this. So let's look at the first trades. Now, what do we anticipate? Great question. Well, I have a single here. I have my ETH high. I have my RTH open. I have yesterday's high. So what do I know? If I open out of balance or out of value, out of range, I pull out my grid sheet. This is in the Trader Lab. And what does it say? Open out of range, gap. What does it mean? The market is out of balance. Is the market responsive? You fade the gap back into balance. Here's where your choices come in. Nada, hang out, work on your crochet, wait for your long, aligned with the higher time frame, or if you can trade counter trend, which means you first can trade with the trend before you ever think about counter trend. If you're going to start trading from both sides, probably not a good idea. Probably will create trouble. Because I always suggest for developing traders, you align with the dominant side. You're going to find if you actually have an edge and create metrics that when you trade counter trend, you have to manage it differently than when you trade in alignment. Do you know that? It is not one size fits all. Makes a huge difference. So we get our open, 8:30 RTH my time. I have an outside edge here. I have the gap fill here. I also know, here's what I have to show you, if I can. Let me see if I can find this. Yes, see this? Watch. Now, on my Bookmap, I came here, and I looked at this. Now, this is 6 in the morning, 5 in the morning. I mean, this is the last auction, right? So what do I have here? Absorption, and liquidity. Absorption, sellers, absorption, icebergs. So I go, isn't that interesting? Let me mark this. This is what I'm doing because I'm not going to remember anything. It's not because, I'm not going to remember. So I mark it. I also am aware that this liquidity came in and I got this reaction. Okay, so these are sellers. They absorb the buyers. So I'm going to remember that. Liquidity comes back in here. Watch. And 9 a.m. is a report. Now, there's a couple things you can do here. What I did is, I'm trying to show you where I took these shorts. It was very quick. Oh yeah, here it is. There. You see where I have my little line drawn? And this liquidity came in right here. This is where I was looking for my short. And like everything, my teeth are chattering because I am counter trend. What else do I have? A single from at 69 or 70-ish, where my liquidity is. Huh, is that a coincidence? Wow, it could be. So what else do I see? Absorption, see the icebergs? Liquidity, back in the book where it was before. What do these guys want to do? Sell. Maybe. Let's look at the trigger. This is what's key. Absorption, buyers are here. Buyers are there. Watch. This is resistance for me. 4 minutes in, and I have 9 o'clock a report. So I know, maybe, again, when I say I know, I don't know anything. What I do know is retail trader behavior. The home sales, I believe it was, I can't remember anymore, seems like a long time ago, was 9 a.m. Central Time. What do I know about longs? What might they do in front of a report? That's kind of important. They might take profits. What are they called? Responders. They are responding. And we have over 90% probability of going here. So this is, as they say, counter trend. Aggressive, not recommended for anybody unless you have an edge. Let me show you a little more. Now, I'm inside of microstructure. Sellers are there, liquidity is there, and remember the sellers were at 5 a.m. or something, so they come back in. If you understand order flow and you have a trade plan, this is how you would set up. And then the trade is random. You know, it's like you sell this and they take you out and carry you in a little stretcher because this has over 90% probability, but I know my sellers. So I'm just looking like you and I'm going, I don't know. Except, why didn't we go up here? Because of them and the trigger here. Now, right here, I get a sweep. A sweep suggests potential for counter rotation. There's my resistance. This is a fractal. What this is mean reversion to there. This is my short. My stop is above this. See? Watch. Who knows? Stops above there. Teeth are chattering. Going, oh no, why'd you do that? Target. So, this is a short. It's only a counter trend trade. It's not anything more than a curiosity. Two ways to play this. If you're in Trader Lab and advanced, that means you're already profitable, aligning with the trend. You are learning counter trend trading by using it as trade management, but not to initiate. That's a suggestion. Now, most traders have FOMO. They don't understand that learning and creating a craft is a sequential process-oriented endeavor. Most traders don't have even the discipline to learn how to trade. They're too busy feeding the dopamine. If you don't understand that, then you're going to have a substantial problem. And still going for 92, not a recommendation. Just so you know, this is all in Trader Lab. So, if you took the short, counter trend, or how about this? You're looking for a long. You see the short, you go, not me. Wait for the responders. Now, where's my support? From the ETH, there. And where's the gap fill? There. Interesting. And the possibility is also to come here. That's, we could always come inside. Who knows? So let's watch. So the short, this was an okay trade for me, and the long happens here. No clue. By the way, when I say no clue, I can prove it. This here, this sweep into liquidity with the buyers, I know my buyers now are here. And now I see my sellers are still here, going to zero. This is an alignment. And now I'm looking for a long. Let me show it to you. So you got a short or you got nothing, but an interesting thing to screenshot and reverse engineer. This is your long. Now, how do I know? Well, let me give you the straight oil from the can. Nobody knows anything. So there, you don't need to know because you can't. What you need to understand, which is different than knowing, is what might happen and where and why. That's what you need to know. And I'm going to add another little flavor to this. This yellow line is the retail or highest volume price. It's right there. What happens is if I come outside and we find too low, which was there in the ETH here, then if I get my buyers, where am I going? Here. And what is this called? In the Trader Lab, it's called mean reversion. Mean, underlined, because it's outside in trading. What was this? Outside in trading. What is this? Same. So if you're trading with the trend, which is up, you're only taking this. And there's others, but this is where your first long is, and it was my first long. And again, I don't know, but I know is my structure is out here. And if, again, look at the ETH. Oh, it's on sale. Throw 4 in the cart. Retail. Where's my current retail price? Here. Throw 4 in the cart. Where might it come? Mean reversion. That's the mean. And then what? Over 90% probability of this, and then up the financial food chain to there. And we'll go into those. You guys have questions so far? Is this useful? How we doing? Please give a like if you're visiting in YouTube. Hope you're getting something out of this. Okay, let's go. So, first long, let me show you the trigger. Now, how do you trigger here? Guys, you have to anticipate to participate. I was joking with somebody. If you guys remembered the O.J. Simpson trial, what is that? If the gloves don't fit, you got to acquit. Just saying. I think that's humor. I'm not sure. I'll leave it to you. So right here, I'm anticipating location, location, location. Trading is like real estate. I don't know. Do you? Let me know if you know. Me, not so much. Key, right here. This, here. Icebergs, sell stops. This is the stops getting taken out. Thanks for playing. They get a coupon to the buffet. My buyers. Stay in the book. Stay in the book. Sell stops coming out again. What happened? The people, the retail traders who trail their stops and use a shoehorn, not so much. So, absorption. Now, right here, I don't know. I mean, if it keeps going, then I'm going down to another location. It's like an elevator. What floor are we getting off on? The sellers are here. So let's look now. Sellers. There's micro high volume. Follow. I'm just giving you a little something, a little sidebar. Sellers are there. Buyers are there. Micro VPOC or high volume is there. Break low, trigger, micro, test. Too high. Absorption. See the green delta, selling iceberg. Break low. Going to zero. Where's resistance? There. There. How do I know? Icebergs. See the green delta? Absorbed. Absorption was there. Ah, look at that. What happened to these guys? Absorbed. Down. Where's my sellers? Here. Micro volume there. I'm taking down with the electron microscope. Watch. Volume is here. Sellers are there. Buyers are there. What happens to these guys? Stepped on. Thank you. Into the buyers. Under the buyers. Going to zero. Sell stops. That's your liquidity coming out. Sellers. This is either we're going to keep going and it becomes resistance, or we get above it. Now, if we don't take this out and I lift here, right? And you could take it in here. Me, not so much. Me in here. What can I tell you? Stop under here. Where am I going? Here. There. Scale. Now I'm aligned with the trend. Back to my resistance. Now, we're still okay. Now we have VPOC migration. Follow the yellow brick road. What I'm showing you here is trading in fractals. Now, I understand you're looking at this probably and going, I don't know what's going on. I understand you don't understand. I never understood either. And I found out over many years of work that what I was doing had random winners, of course, but was not sustainable, didn't even have an edge. And I was always trying to fix it and, do better, of course. But I kept coming back to the same place, Trader Groundhog Day. Remember, this is our long, right? Now, we have I see we're back at 86, which is our single. I'm going to try to get into real time, but I want to show you a couple of these trades. And I might skip some of them. This is support, too low. What is the yellow line? This is the high volume. What does it say? Language. I don't use indicators. I had to learn to speak market. I can read this because I'm not using Google Translate. Resistance now is here. There's more. And this was one of my targets. So now, sweep. What does a sweep do? And this is the report. I get counter rotations on sweeps. If I anticipate a counter rotation, I can then look to buy this, and this is my support. Too low. Volume is up here. If we think like shoppers and this price becomes too low, then we can think of it potentially as support, right? I'm going to put a little line on this thing. And I also remember what's down here. Down here, I have volume right there. What is that telling me? In the fractal, too low. Just watch. You guys can learn this. I believe anybody who does the work, and it's going to conflict with your beliefs, most likely, because this is different. It is not what most retail traders do. It's an advanced trading methodology, but it is simple. What is advanced about it is you actually will learn to trade if you do the work. You will differentiate potentially yourself from other retail traders. So what is this? The retail price. What is this? Too low. What is this? The VWAP. What is the trend? Up. And remember, my long, we had the ETH high as a target. You do remember. And what was that probability? I know you guys write these down. Almost a 98% probability to take either the ETH high or low. I don't know about you. For outside yesterday's range, and we held the outside edge of the ETH distribution, it's on sale. I'm going north. How about you? Pick a side. What do you think? There. Scale or, so here's the deal. Long to there, and then one for the breadbasket, So, or however you do it. And there's another one, a 98% probability to take out the first hour's high or low. Again, me, long, watch. Now, I pull back to VWAP, mid, and I know this is support. My longs are from here. My scale is there. Now I'm working on my crochet. Let's watch. Too low. What's this? VPOC migration. Watch the subtlety. This is nuanced and, again, not complicated. What am I doing? Besides me asking myself that, what I am doing is just narrating the shopping. Traders are shoppers. What is the function of the market? Figure out what it's worth. How does it do it? what's too low, what's too high, what's retail. And as it does this rotations and auctions, like in this time frame, this is too high, but it comes back to what's too low, variable high volume node. This is called VPOC migration. This is an advanced process in TraderLab. It's the last place you want to initiate trades. It's the first place to attempt to decipher and interpret developing value. Value is high volume. Just think when you go to the store. If everybody's buying tuna at $1.50 a can, even though it was $1 down here or 75 cents in the micro down here, but the retail price is now here and it's moving higher, what is that telling you? Value, perception of value is moving higher. What happens here? Prices are moving higher. If I test this price in the micro and I get my absorption and my liquidity jumps in the book and I get a bounce here and I hold the absorption, what does that tell me? There's my icebergs. Buyers, break high. See, you can go wherever you want with this thing. But what do I know in this fractal? Resistance. There it is. See the behavior? Isn't this interesting? Too low, go down in time frame as you think of it. Too high. Where's the high volume? It's right there. Shopping. In this fractal, Russian dolls, Matryoshka dolls, they're inside each other. This is too high. In the developing daily time frame, going up in time frame, this is too low. I can buy this, I can scale here. Same reason I could buy this and I could scale there. Is everybody tracking? Hope you're getting something out of this. Gary and everybody who's asking questions about this, there's a link in the bottom of YouTube. You can come to TraderLab. There's no cost for it. This is an advanced methodology. I believe personally, and I'm not saying it'll work for you. If you actually come to TraderLab, and you need to understand, this is not a plug and play and now you got an ATM in the basement. This is going to take you time because the market's always developing and evolving. So we don't have certainty. We operate in 100% random environment 100% of the time. So, and I have to touch on this because we come into the business looking for certainty and predictability. And the term that's in our heads is confirmation. Is that part of your self-talk and language? I'm looking for confirmation. Did you ever think about maybe you're in an environment where that doesn't exist? If there's no confirmation, what is there? There's maybe. And the casinos operate the same way, so they're very successful in an environment where they have no control except over the games they play. And they play games that have an edge that favors them, even though they pay to gamblers. Guess what? We're in the same business. So what we do in TraderLab is now we have to understand the condition of the market. We only deploy trades that are in alignment with the current condition. And, of course, the condition changes. So we are dancing or reading music. This is a foreign language. And for most of you, it's foreign. You've been using indicators to translate. I get it. Wouldn't it be nice? If you knew how the market worked, you might actually be able to use an indicator more productively. Instead of thinking you want to sell it here because a little spaghetti crosses over, would you be getting long here or there? Not here, here. Would you know to be looking for a long here? You see? If you don't, then you need to come to TraderLab. Now, what do we have here? Liquidity, obstacle. This pulled. It might be the same guy. Threw it down here. I don't know. Watch. Now, I have over 98% probability. And this, so let's watch. I don't know about you. I'm feeling okay about today. Now, let's look. At 9:30 Central Time, we have something called the IB, right? And there was what? Over a 98% probability to take out either the first hour's high or low. That's this thing. Notice this, break high, pull below. Who's here? The buyers. What do? We break high. What is this? Huh, you're going to say, what is that, Tom? That's an advanced process in TraderLab. That's an ad, or it's nothing, or it's you're just working on your beads, your braided beads. Resistance, break high. Right here, it's what's going on. What do I have in here? Micro high volume. What is this? Support, break, test, clear, pull, support, absorption, break, micro high volume. Where is it, Tom? Come on. There. This is your mean reversion in fractal. Outside in. See? Outside in. To where? The top. Let me show you. I'm really drilling in here, and again, you might just go, where's that airplane sickness bag? I don't know how you respond to what I'm doing. Sellers were here, buyers are here. There's the icebergs. There's the selling iceberg. There's the liquidity. There's the break. These guys are under the trawl. The buyers are here. The break was there. This is your resistance. I break above it. I pull back to where? To where the buyers were. And there's my absorption. Break high. This is a long, using this structure, advanced, off you go. Now, just giving you something to think about. Now, where are we? Let's look at this. Fractals, guys, fractals. Ask your questions, and if I can't get to them, especially if you're in YouTube, come to TraderLab. There is a delay in YouTube, so it's a little hard for me, and I want to really show you how this works. Now, there's nothing predictive in this, it's only maybe. So maybe right here, this is a high volume node. What is this? Chop, chop, chop. Buy stops. Micro high volume structure, HVN, high volume node. This is a fractal. This is like mean. This reversal back is mean reversion. Coming back here is a reversion. Coming from there to there is reversion. Breaking high, coming back to the high volume is reversion. So you can slice this down into anything you want. Up here, break low. What is that? Too high in the fractal. Absorption. Where's my resistance? It's here. What do you do with this? Well, maybe you're going to get a counter rotation. If you're in the TraderLab, what else do you know? We have a structured trade at the IB high. It's called the IB continuation trade. How would we know to trade this? It's a structured trade in alignment with the trend. There. What happens here? Liquidity comes in the book. Liquidity is here. Liquidity comes in here. Okay? Watch. Now, I'm clueless. So I have this structured trade. And I have an outside edge there. This is another low volume node. How does the market work? Too high. Where's too low? Yeah, good luck with that. Where's my retail price? It's there. High volume node. Again, what am I doing? Mean reversion. Break low, back to this is the mean. Come back here to the outside edge, return to the mean. Long to there, helmet. Watch. VPOC migration. Oh my goodness. What does it mean? What does it mean? I'll show you. This is language. Music. Foreign language. You guys ever try to play a musical instrument or learn a foreign language? Huh? Next target. Now for me, we know 85 is a strike price and there's liquidity coming in over here, I got my next scale was right up in here somewhere. Yeah, there. Actually, it was right ahead here. So I got scaled ahead of this chicken, and now I get this. Now what? Now, before I answer the question of now what, I'm going to look up and see if you have any questions. Thanks for your patience. Hope you're getting something out of Trader Lab, guys. Guys, I don't know what the problem is with audio. You should jump out, come back in. One moment. Okay. So we pull outside. Now, this is more nuanced. What do we know about this? There's stops here, and we know there's absorption here. How does this work? Great question. If they're, and retail traders put their stops under here, there's absorption here. So I know there's going to be stops, and I know I have buyers here. So if I come down and pick these guys off, I want to be a buyer if the trend is intact. So what do? Here comes the stops. Thanks for playing. They get a coupon to the buffet. And what happens here? Look at the icebergs. This is another long, and where you're coming is there. Or here, can't tell. Here, for your scale, and then out the top. That's where you're trying to go. And 92 is our next target, you know. So this is another long, and you're hanging in here doing your thing. I think that gets us kind of close. Where am I? There. You see the resistance. So this was our target, and then we have one more. And then after that, you know, you put your helmet on. We have this and potentially, you know, wherever. Then it's no clue. How we doing in YouTube, guys? Okay, you guys, okay, if you guys are listening, having a problem in Discord, anyone who has audio in Discord, please post. For those who don't, it's Discord, and they should jump out and come back in. It should fix it. Next, if you're in YouTube, the answers to your questions are in the Trader Lab. I cannot answer detailed questions and do them justice. I do answer questions in Trader Lab, and the point of Trader Lab is there's too much for an individual like myself, since I'm a full-time trader, to do. But I do a lot of posting in Trader Lab, especially how to build a plan like this. And I want to show it to you so you guys know where we're going here. This is just long and, you know, up the food chain, and whatever it does, it does. Let me show you this. So this is the Trader Lab. You can see there's a lot going on. Trades are posted, questions are asked. This is all what I'm talking about here. And traders do their own thing. We all learn from each other. It's not about me. This is about you. You know, I'm just like you. Perfect pair. Very nice. Yeah, you getting it. Statistical probabilities. Data mining. This is what's going on in Trader Lab. Now, let me show you this morning. You could see a lot of this is posted. Remember, this is yesterday. But I want to take you back to something I posted this morning that's really important. And this is your personal invitation to Trader Lab if you want to learn this. It doesn't mean you'll be a successful trader. Many retail traders are jumping from chat to chat, method to method, and all they're doing is putting garbage in and garbage out. How do you minimize the noise and get to something consistent. That's your job to be in this business. There's not one way to trade. I mean, wouldn't that be nice? Except there isn't. Don't ask me how that happened. I gotta get rid of that. Oh, trouble. Hold on, guys. This is a grid sheet of context. This gives you your first, where you open, gives you a sense of the behavior, and then based on your plan, what trades qualify in alignment with the condition of the market. Have you ever thought about that? It's not all the same. Now, this is previous to RTH sessions are a lesson in the auction and structured trading. If you watched the last two, power trading plan, that was for that gap and run up day. And then yesterday was the counter trend, trading into the stops, taking the weak side out so you could get continuation reversion longs. And then, of course, today, you should be watching. If you take those and today and reverse engineer them, I think you'll go a long way to learning the business of trading. Now, I also want to show you something else. And thanks, Ned, for curating. This is the library of webinars. Start with the primer webinar. It gives you a high-level overview of the process that I share. It's got about 33,000 views. It's about an hour. Meet the Trader Lab. It's an advanced trader education portal. There's a lot going on here, but I want you to know advanced is not complexity. Complexity is the problem because of randomness. You're in a random environment. You can't have random inputs. Otherwise, you got garbage going in and garbage going out. That just creates randomness. One side of that equation, your inputs and the market's randomness, one of those have to be anchored. You can't anchor in random environment. You can only anchor what you do. That's what the trade plan is, and that's what anchored inputs are. Anchored inputs you can measure. That creates statistical probabilities. Random inputs are just noise. There's nothing there. Stop gambling, start winning. We all have winning trades, and we all think we just have to make it better. Gamblers have winning hands, and they think they can make it better. They don't have an edge. So what happens to them? In spite of the winning, they lose. Trader Groundhog Day. That's slamming more spaghetti, more chat rooms, more whatever in there, looking for certainty, having winning trades, because anybody can have a winning trade and getting the same outcome. Why are you going to keep doing that? At some point, as they say, you got to put a stake in the ground and say, I've had enough of this. PDFs, a whole library of documents, a glossary, understanding mental obstacles, and then I've got about 650 streams out there, some up to 5 hours long of real-time narration. You can, chew on those for a while. But I think the real key to this is the Trader Lab, understanding how the market works. If you don't understand how the market works, you're going to be continually frustrated. It's frustrating enough in a random environment. It's always frustrating because we basically don't know. So if you don't know, because a tweet, somebody trips over the cord at the CME, anything can happen, right? You don't have control over those things. You only have control over what you do. If you take control and responsibility and learn to manage the lunatic, who I call Hyde, Jekyll and Hyde, the lunatic is the fearful one. The one who goes, oh, I'm going to get stopped out. Gee, I better get out. Oh, I'm going to get, all that crazy. The crazy in your head is primal wiring. So we're all nutty because we're pushing against risk avoidance. Yet in this business, we have to take risk. Same as the casinos. They take risk of paying the gamblers. We take risk in taking stops, and we will take stops. It doesn't matter. I know we cannot get detached from how we feel, but how we feel is only a response to primal wiring. Our business requires us to put intelligent risk on when we have a statistical edge and accept the random distribution of outcomes. it's completely contrary to our primal wiring. Our wiring is, I want certainty. Is there a saber-toothed tiger behind the rock? I'm going the other way. I don't want to find out, right? So when it comes to putting a trade on, you don't want to find out, is that a saber-toothed tiger? And your psychology cannot differentiate. So how do we get control over the lunatic who you cannot control? You desensitize yourself to the stimulant in the hormonal response by having tangible statistics. I know when I take the IB continuation trade in this context, I have X% probability of getting risk neutral before taking a stop. If that expectancy is positive, I now have courage. So when I get triggered by my lunatic under the hood, the emotional triggers, I can acknowledge it, I understand it, but it is an impediment and it just gets put to the side. Thanks for warning me. I got it. Now I got to put my trade on because that's my job, because the only way I get profitable is to extract my edge. Do I have a positive expectancy to get risk neutral? If I get risk neutral, I've now got better control over the lunatic who's going to want me to bail out on every counter rotation, right? Been there? Done it? Raise your hand. Okay. Now what? If I'm risk neutral, the worst that's going to happen is I'm going to scratch my trade. My brokers are going to send me a gift basket. Or if I'm in a good location and I'm willing to give back my open trade equity because I have a high probability target, I have choices. I can manage my trade based on a vetted plan. And then it's either get here, scratch, or whatever. Or trade rotations for continuation trades, understanding how to operate in fractals. That's it. I think that's it. If you're interested, use the link in the bottom of YouTube, visit the Trader Lab. I believe anybody can learn how to trade if they do the work. Most developing traders are experiencing FOMO, so they're running around like chickens with their heads cut off, jumping from idea to idea. If that's you, that's FOMO. Because you won't roll your sleeves up and dig into something that's going to challenge you. This will challenge you. Because this is contrary to what you believe. What you believe is you can get certainty. You can get probability. You cannot get certainty. So then the goal becomes probabilities, not certainty. And then it's, where do you have edge? That's it. And then you're going to take stops. We all do. We all pay, just like the casinos do. But if you only play games with an edge over time, in a random environment with a random distribution of outcomes, you're going to extract the dollars from the gamblers. Do you want to get to that? You're going to have to roll your sleeves up and change what you believe. I had to, and I spent years with indicators and then trading systems, that were optimized, which is another term for curve fitting. Doesn't matter. No matter what you're doing, we all have winning trades. Now, we want to watch the behavior here. What do we see? This comes in the book. There's our sellers. Let's look at the structure. Sellers are here. Microstructure. Microstructure. Break high. Sellers are here. What do I see here? Sellers are here. Where's my absorption? There. What's this? Microstructure. What is this? Counter rotation. Let's look on the other side. Where's my outside edge? It's out here. Where's my stops? They're sitting under here. What do retail traders do? Buyers are here, buyers are here, buyers are here. Stops are here. Stops are under here. Where was support? Let me try this again. Sorry, guys, I'm working between like 3 computers here. I'm losing it. And you're going to say, yeah, we know that. Let me show you. So, what is this thing? This is a distribution. I'm not paying that. Yeah, but it's on sale. Retail. Then what? Breakaway. Sellers were here. Buyers are there. Buyers are here. Where's the stops? out here. How do I get long? It needs to come out here to this. Oh, it's on sale. Retail trend up. Now, the stops are here. What makes this very difficult is where is the outside edge? What I know is I got stops here, there, and I got buyers here. So here's the thing. If it comes out here, I can buy this. Not a recommendation. If it can't come out here, because my buyers are here and they're absorbing, you see, the buyers, then I can just keep going. And it's like, sorry, Charlie, didn't get my location. No trade. This is a long. No bueno. Can you see why it might be a long? Does this make sense? When you see this is the liquidity marker. It's showing this added 110, then pulled 98. It's probably an algo. I don't know. Don't know. Here's what I know. If I came out here, this is a long. What is it? Mean reversion. Outside in. You see? This idea of reversion trading, what is this? Too high, too low? That's the mean. Break high, too low. If I get out here, this now is a long. But what I like to do, and it's just part of my plan, and I'm not saying this is a good plan, it's just something that kind of developed over a few years, like 40 of them, 46 actually, that if I can get below these stops here, these guys, then it's good. But what this tells me now is demand is here. That's the absorption. The sellers are here. See, why isn't it going down? Those guys. What happened here? Aggressive buying. Now, I got to get through this, right? And there's my sellers. So what do I know? Sellers are here. Buyers are here. If I come under here, I'm going to consider a long. If I can't get back here, I'm just, back in the Barca Lounger. Nothing to do. You'd still be sitting long, from this. This is the last structured long. This is fractal. This is now going down in, this is like, you guys think of time frames. I don't. Time is not the issue in this. It's the behavior. So take the clock, lock it in the closet, because it has nothing to do with this. That long was very nice down here. This was okay too. All these are good. Guys, is there any reason you can't learn to do this? Other than you don't understand what's going on, I get it. But it's simple. This is shopping. If you know how to shop, you know how to trade. What is different between this, what I'm doing here, and what you do in a supermarket is the rotations of price. The market is always trying to figure out what's too low, what's too high, what's fair. And if we find unfair, we're either going to stay or leave it. If I stay here, I'm going to do this. If this is too low, and right here I have my buyers, then so this is the next target. Whatever happens, happens. Is this making sense? If you are a shopper, you understand auction market theory. The auction is a shopping experience. Why do we have a market? What's too high? What's too low? What's fair? And this process is taking place in all fractals or time frames. I call them fractals because here there's no time other than the open and the close and, a couple of elements. But the time it takes for this too high, too low to get sorted out is the only time I need. The high volume is here. When I break away from it, I can test it. If it's too low, what am I going to do? I'm leaving. If I test it here and it's too low, I'm leaving. I come to a different fractal. I'm leaving. Too low. Now what? Too high. If I don't get through here, I can come back here. What am I going to do? If I get under here, I'm already waiting for it. If it never comes back here, I'm sitting in my Barca lounger with my mint julep. Maybe not a mint julep, but you get the idea, right? Why is it coming down? The sellers are here. And where are the buyers? Here. Where's the stops? Under here. If I get the stops coming out, I'm looking for mean reversion. Does that make sense? Please give a like. I hope you're getting something out of this. Guys, we're talking about platforms right now in the Trader Lab. You really need a good tool to do this for accurate levels and things. Many traders come in the business, and of course, overhead and cost is important. As you develop, you're going to want better tools. Obviously, Bookmap is a high-tier order flow tool. You need that if you're going to be able to act in a timely fashion and see what other traders aren't seeing. If you understand this, you would understand that we're going to get potentially a downside rotation. Why? It's too high. And there's the liquidity. Now, where's the stops? Let's come back to the idea. And this is not a trade recommendation. Where's the stops? Here. Where was my support area? It's going to be in here. If I can get under here, then I'm going to be looking for sweeps, liquidity, icebergs, and something. Outside edge is here. Low volume node. How does the market work? Outside, trend up. Now, we do have this. So if we come back here, we're going to have to deal with this. Let's watch. And I'm not going to call trades. I don't do that, but I'm already told you what I think might happen and the areas that are important. Let's just observe it together. Absorption. Outside edge. Volume is here. Micro. Volume is right under here. So this is your resistance. Scale in here. Subject to. Not a recommendation, guys. I take stops. You take stops. Let's know. Don't take my stop. You would be very unhappy. Just take your own. Where's my resistance? Here. So, if I get in here, I got to be thinking about this. And then that, and, I got to clear all this, okay? So I got to clear this thing. I need to hold this here. So let's just see what it does. A curiosity for this astute group of traders. Anything can happen. Just remember. How we doing so far? Everybody conscious? Not a recommendation. Remember, these are areas of potential behavior. These are not recommendations. You always like a trade to work, don't you? Here's the problem. Who knows? I use the term clueless, but not ignorant. I always find these are like curiosities. It's like, what's going to happen here? And the thing about that, what's going to happen, that's the fear being triggered. So there's anxiety, uncertainty. How can you be certain of anything, right? Well, you can't. So you got to train yourself to accept it, not to like it. I don't like it, but it is what it is. This selling iceberg absorbed these buyers. So we need to get above this selling here, or else not so much. And we can still come outside further. And if it did, and again, not a recommendation, unless this thing completely, goes into the financial commode, I'm still going to be looking for longs for continuations, unless there's structural failure. Not a recommendation. Naturally, right? How we doing? Everybody conscious? Please give a like. Yes, I'm using the Global Plus with the MBO. CMJ, you've been sitting in that long since 1040. Is that Central Time? Probably. That was the last structured long in the methodology I've shared. Guys, with me, you're getting the result of 46 years of trading, both professionally and otherwise. And I found my development was really bad. It took a long time because there was no information. There was no internet. We didn't even have PCs. I got my first computer was an Apple IIe, and then I went from there. Technical analysis as we know it today was really in its infancy at Wells Wilder and all that. So I started with that, and I thought it was all about indicators. So it was indicators and time frames and classical bar charting. We didn't have candles. So it was, bars, open, high, low, close. So kind of started with all that and measured moves. So I came into the business and I went to the CME to learn bar chart, classical charting, head and shoulders, all that kind of stuff, and I thought it was about measured moves. So that kind of set me on a course of prediction. It's going to do this, it's going to go there, all that jazz. Well, that's not how it works. But I can't even tell you how many years I spent working in that area, working with indicators and then creating my own and doing deep dives as these indicators developed over the years. I would pull them apart. So I spent years and years and years, working with different tools and trying to put them together and then build trading systems. I always ended up back at the same place. In spite of winning trades, winning weeks, winning months. But I always ended up in the same place. I didn't have sustainability. I had some profitability, but that's not sustainable without edge. So you can beat your brains in looking for certainty and looking at your P&L. The P&L is the outcome of a edge. It is not the outcome of random winners. The winners will be distributed based on the edge. Random winners, everybody has them without an edge. Isn't that kind of a conflict? So for me anyway, I'm just saying is that the light bulb went off. It was kind of dim because there was no information. I learned market profile from Peter Stoudemire, who created it at the CBOT, and I brought it back to mix with my indicator. So this trade looks like, unless we get our buyers here, this is going away. We're outside again. The hard thing with these reversion trades is where is the outside? That's why we call them mean. So this trade could very well be a stop. That's why you don't take these things. So let's look a little further. Where is my next location? It's going to be here to observe. Let's see if anything happens over in this area. I use fairly tight stops when I trade, and I also need to get risk neutral. I needed, if I get long in here, I got to go there. Didn't do it. That's a stop. It's as easy and simple as that. I don't sweat it. I don't like it. I just move on. It's already gone. I'm now here, and I'm looking for absorption, and there it is. I have to look now and see if I can get long. This is the next location, right? Here's your microstructure. This is your support. And you would need to get there. There, actually. That high volume right there. So you want to get through this. This is like a VPOC. What I'm trying to do here is trade what's called mean reversion. So it's outside in trading. Very annoying. And difficult. Now, everything's difficult in trading because of randomness, but makes this difficult is where is the true outside edge. We know where it might be there, and it might be here. So there, not so much. Where was it? The long, I don't remember. I don't know. I think it was here. And then here. And you're trying to come up here. So you'd have to execute this thing with a shoehorn. And that's up to you. That's another long. And it can fail like the rest of them. We can come back here. But the idea of this trade is, this is the fair price for the whole day. In a fractal, this is the fair price here. If I come outside and this is too low, I can come back here. If I fall out, I'm coming back here, and then that would be it, you know. And then it's sit back in the Barca lounger. Microstructure. There. Why? It is support, by the way. Let's see. Now, this might be too aggressive for you. I understand, and I'm not saying it's anything more than an idea. You determine where you trade. You learn to interpret the language. You also learn where behavior might show up. And the joy of trading is we don't know. Always random. This is a long. Let me show it to you. Micro, I'm down in with the scalpel here. Not saying this is good. I'm just saying it's something. Sellers are here. Buyers take control. Test. Absorption. That's a long. Stop could be right under there. And then you put your helmet back on. Is everybody seeing this? The good, the bad, and the ugly. How we doing? OP, is it 1,000 tick? I don't use any fixed, if you're asking here. No, there's nothing. It's whatever it is. You just open it up. But there's 1,000 tick. It's whatever it is. You know, I can get, you know, I can go anywhere with this. So I can see this, you know, as the trades happen. So, you know, so I just zoom in to see the structure that is useful for me because I could read this. And all it's very simple. There's nothing complicated about this. Right here, this is absorption. And where did it come? You see, this is what's so important. Understanding structure of the market. Sellers were here, buyers were there, too low. break high, too high. And then there's stops here, which is where I was thinking along. Would have been better, of course, to take this one. Who knows? That's the long. Same trade, different location. That's part of the mean and mean reversion. Entry is there, and then you're going for risk neutral because the trend is up. You get risk neutral, your stop's under here, and you're back in the Barca Lounger. Then we got to get through this. These guys, and the liquidity is sitting in here. So if you're risk neutral, your job now primarily is done, other than trade management, which you may or may not have vetted. Hopefully you get to that, because we all get taken out of trades. We all give back open trade equity. We all get annoyed. And we all want to go here. That's what I know. The rest, clueless. So can you see? Stop here, and it would be a very tight stop. Long here, tight stop. Risk neutral, stop under here. It's buying a ticket to ride. Sometimes you get thrown under the bus, other times you get on the bus. Does it disturb you to take a stop? I always get a bit disappointed. It's like, but that's an emotional response. As a business person, I have to be glad about the stops somehow. I don't like paying bills, but I understand the casinos pay the gamblers, and they seem to do pretty good. They give them the cocktails, they give them the tickets to the buffet, and maybe even tickets to Adele. If you're a high roller, they fly you in, comp your hotel, and they're still making money and building larger casinos. I consider that as a sign. What is resistance? Remember I marked this? I said this is where the sellers dropped it. That's resistance. Now, the fact I said something doesn't mean anything. What it means is I read the language, and I know what happened here. I know my sellers took control there, and I know it's resistance. If I get long here, I can take my scale there. And then it's either going to fall out the bottom, say la guerre, or this holds, and we might even come back here because the buyers are here. But if the buyers are here, here's the other concept. And I took the stops out under these swings. If I took the weak longs out, what was going on here? The buyers taking the other side of the liquidity. Then where are the sellers? They are there. You get long there, you got to be scaling ahead of this. Then you're okay, now what? I don't know. Do you know? If we get below 61.77, sure. In the meantime, if we are in this trade, which is a Trader Lab structured trade, advanced, what makes this advanced, by the way? The range. Getting long out here, outside edge, is the same as getting long out here, outside edge. Do you see something interesting? Long, long, long. See? Same. This is called trading in fractals. Once you understand market mechanics, then you have a sense of where behavior might take place. And then you can construct trades that fit inside structure. And then, as they say, wear a helmet. The goal is to get risk neutral. Here's what I know. There's sell stops under here, and my buyers absorbed here. That's what I know. So now if I come under here, this is my support. Do my buyers come back in here? 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 And we get this? Or is this too high? You see? And then we continue down to another location. All that is possible. So in the plan, what is it all about? Risk management, risk neutral. So we got support, resistance. This is your support. This is your resistance. This is your support. That is your resistance. If buyers show up again, which of course would be nice for the longs, then and clear this, then north. If we can't, and this is now my resistance, then the longs can now get abused. Equal opportunity to get abused. This is trading. If I break under here, then I'm going to look back at the high volume node. This is then mean reversion. Coming to there is reversion. Coming back here is outside. If I break below here, I'm coming back here. It's if this is too low, then that. If this is too high, then what? Then that. If I get under here, if this, then what? Then stops. If I get buyers here, then what? Then that. If I get stopped, scratch, then what? Then still here and this. That's it. Outside, stops. The buyers are here. Now we have stops under here, and we want to see what happens if we grab this inventory. Do the icebergs absorb it? Sellers get absorbed. Let's see if there's our buyers. Let's see now. Do they have it in there? Watch. This is sort of the way this works, you know? Now, this doesn't mean it's tradable for many traders. It takes a lot of experience, obviously. But here's the thing. In Trader Lab, we're not trading for this. We're trading for that. This is the last structured long in Trader Lab down here. Is that okay? What do you think? Okay for me. Are you guys tracking? Buyers getting absorbed? Well, when you have delta like here, why doesn't the market go up? Because of the sellers that are absorbed. There's two sides in the market. There's the aggressors and the passive. Icebergs, these are limit orders. They're passive. If you put a limit order out there, you're in no hurry. You're hanging out. Well, this is sell stops coming out. So those are market orders. But if the market doesn't go down, it's telling, there's the iceberg. They are being absorbed. That's absorption. And absorption's a big deal because the fact we see this bubble here, if we can't continue down, that means there's a passive buyer and it's at location, you know? So we're kind of hanging on the edge of the cliff here with our nails. And if we break down, then the stops under here get taken. And I always suggest, and you have to vet this, everybody, that your stops are 3 ticks under these edges. Because often what happens is the market will come under, grab the stops, and the buyers that were here buy some more. You see? So we'll see. Anyway, I see I'm run out of time. Please click the like before you exit. Use the link in the bottom of YouTube to visit the Bookmap Discord Trader Lab community. It's open to everyone. There's a library of webinars, 60 PDFs, and I believe anyone can learn to trade if they do the work. This is not plug and play. You actually, to change your outcome, you've got to change a bunch of things, but you have to vet them. And then, as they say, do your thing. Please give that like. Remember where we're going. This is a long, not a recommendation. There's your absorption, and this is our resistance. We can get through here. This is our next target. Hope you got something from today, guys. Don't forget to leave the like. Appreciate you being part of the Trader Lab. And if you're just visiting in YouTube, you got an open invitation. Don't miss out. Thanks again. Look forward to seeing you tomorrow. And have a great day. And thanks for visiting the Trader Lab. Appreciate it.